Morning, everyone. Morning, YouTube. Morning, traders. Hope you're all doing well. It is Thursday. It's Thursday, February 9th. We've got some news, nothing too crazy. Overall, yesterday we did get some of the downside in the market, but quickly bought up in the overnight session, really presenting the case that there's still some bulls this week. I think these bulls are pretty eager to try some of these key resistance levels yet again, right? We're coming into a key area on the S&P 100 futures at the 41.75 region, right? We'll talk about the levels a little more in just a bit, but so far, right, the bulls are still sustaining. There are actually a decent bit of large bets to the downside for the next coming weeks. So we'll see. Is this the most hated bull rally of all time? Right? Is this a strong actual market? Our pullback's going to get bought? Is the bottom in? Right? We have to take a look at a lot of different scenarios. But right now, markets are fairly strong. Right? There's no real reason to be aggressively short necessarily just yet, but that reason might come out next week with the inflation data that we're expecting, which is one of the main topics that we're going to be talking about next week. But as for today, right, I want to talk about JP Morgan a bit because Jamie Dimon, right, JP Morgan CEO, not too long ago, I think it was last June to be more precise, he warned about a pretty large economic drawdown in the overall market, right? An economic hurricane that was coming down the road, if you want to be a little more specific. But yesterday, he actually told Reuters that the U.S. economy was in good shape, right? Still, quote unquote, sticky inflation could compel the FOMC to increase rates above the 5% target from 4.5 to 4.75, which is the current level right now, echoing the recent views that the Fed officials many Fed officials, sorry. And earlier in the day, Minneapolis Fed President Neil Kashkari said he expects the federal funds rate to be above 5% at some point this year, which prompted some of the downside from that yesterday's move. And Fed Governor Christopher Waller also expressed a similar look, but no one suggested that the January job blowouts report would make them more aggressive in setting monetary policy. I don't think anyone's really addressing that case. But it's funny how a lot of people in a lot of large, influential economic, monetary policy, banking people, I would say, have really turned the tides here, right? From an economic hurricane to a massive slowdown, massive recession. A lot of people are seeing this market and thinking, well, hey, you know what? We'll probably get some kind of upside rally and maybe the bottom's in. Now, naturally, if you take a look at a macro sense, I don't necessarily think the bottom's in. I think the probability of pulling off a soft landing is still fairly low, but those odds are starting to increase a little. So it's something that we'll have to watch. But as it stands so far, the longs are still favorable. The longs are still strong and they're going pretty good, right? Every dip is getting bought up. We can't close below a key distribution block, 4105s. On the futures, and we can't accept even below that at the 40-90 region, right? If you accept below that and you close below that, there's going to be some decent downside momentum, but that's just not the case right now. There's a few things I do want to talk about streaming services here, Netflix and Disney as well, but before we do that, Robinhood, they posted earnings yesterday, rose about 5% in the after-hours trading on Wednesday, despite missing estimates on top and bottom lines. And traders instead focused on the increase on average revenue per user and second straight quarter of positive adjusted EBITDA as the retail brokers' expenses slid from about a year ago. With over $6 billion on its balance sheet, Robinhood also revealed that it's in talks with the DOJ to buy a 7.6% stake of a company from disgraced crypto tycoon Sam Bankman-Fried. So that's going to be pretty interesting. But right now, I'm not sure where Robinhood shares are, to be honest. It's a stock that I haven't looked at in a very long time. What was it? What was the ticker symbol? Hood? Oh, they're up, right? They're not up aggressively, I would say. They're about $11 right now. Maybe something to consider today, up about 6% from their IPO, down very drastically, realistically, right? They IPO'd in around, I think the peak of this move was about like almost $85 or something, and now they're kind of just wallowing in these lows. So something to consider. And keeping an eye on Robinhood if you're an options trader. We'll see how that kind of shapes up today. But another thing to mention is talking about Netflix and Disney here. Disney, the return of Bob Iger to Walt Disney CEO job in November promised a reversal of the company's recent fortunes and some potentially big changes to be made to the company structure. That includes cutting 7,000 workers and $5.5 billion in cost. So Iger, I'm not sure how to pronounce his name, but confirmed on a company's earnings call following a quarterly beat that pushed the stock higher in after-hours trading, and shares rose about 9% or something. After he mentioned an effort to reinstate Disney's dividend that was suspended during the pandemic. So we'll see where this kind of goes. Right now, let me just check. Well, I'm prepared with this. Let me just see what Disney's doing right now. Disney's up pretty aggressively after that earnings call, right? Up about 6.5%, right? Disney bottoming out around that $84 mark, and it's up pretty aggressively from those levels. One of the names to consider, right? I think it's a pretty solid longer term play as well, having a bit of stake in it. But that means reorganize the company into three businesses: Disney Entertainment, ESPN, and Disney Parks, Experiences and Products. So Iger said that he knew breaking out ESPN into its own unit would lead to a persistent question about the potential spinoff, but confirmed that the brand was very healthy and we just have to figure out how to monetize it in a disrupting world. So with regards to turning a profit at Disney Plus, Iger emphasized that reestablishing the connection between content decisions and their financial performance is one of the most important steps we can take to improve the economics of our streaming business. And his number one priority was this. So we'll see how that shapes up, because Netflix as well is looking to add some additional source of revenue into its current macro in this current macro environment, right? It's adding more members to the roster of countries where it has cracked down on password sharing. Canada, Portugal, Spain, New Zealand have been added to the list. That also includes Chile, Costa Rica, and Peru. Makes account holders choose a primary address verifying the location once a month, and gives the ability to buy access for 2 additional users. It's only a matter of time between before the password crackdown comes to the US as well, which would create a core problem according to marketplace authors and other analysts, right? As Netflix is no longer the only game in town. A recent Jeffrey study on the password browsers indicated that 62% of its respondents would stop using Netflix, but again, they weren't paying for the service in the first place. So that's pretty interesting to note. If we start looking at levels here, guys, let's take a look. What's going on here? So, one second. Let me find this chart. So as it stands, right, pretty decent rally in the overall market that shaped up in the overnight session here. We're coming into a key area. 41.67.68 is going to be our first area to see if any sellers do come through that region. But right now we're holding above the 41.60 area, which is a key top of the distribution block. As long as that area holds and 41.52 holds, I think these longs are going to try that move to 41.90 today. There's one blockade at around 41.75 where the sellers are probably going to attempt the downside. We'll see how they do that and what they do about that. But right now, fairly bullish. As long as 41.52 holds that region on the S&P 500 futures, I think there is the potential for those longs to really burst and try into the 41.90, 4200s into the end of the week, right? Fairly bullish. I think there's just dip buying that's going to happen throughout the remainder of this week and probably next week around the inflation data. We might get some kind of different market momentum, but right now momentum super strong. And honestly, like the way this is going, 4,300 is not a far target realistically. So we'll see how this shapes up. It's very important to see how this week closes and how today even closes. But we'll see. The sellers, they have to try 41.75s. Otherwise, right, this is probably going to be a blowout to the long side. So keep that in mind today. I'm going to be watching this very carefully. No necessary bias right now. So on and so forth. Let's see what we have here. This is a dead cat bounce. Well, I hope everyone has a good trading day, and we'll see you guys tomorrow. So thank you and take care, and check us out at community.tradeproacademy.com.